presentation, and our next presenter is Agudo Carolyne, Head of Customer Experience at Housing Finance Bank. And she is a seasoned customer experience expert, currently working with the leading indigenous bank. And as head customer experience, Agudo has 14 plus years experience in the banking industry. So she will be sharing her expertise on customer service innovations, strategies to win in this digital era banking. So let's welcome Agudo. Hi, Agudo. How are you? You are mute. You just need to.
Good afternoon.
Good afternoon. How are you?
I'm good. Good afternoon, everyone in here. I'm fine. It's afternoon in Uganda. I hope you're all well.
Yeah, thank you so much for being here. And we are honored to have you as a keynote speaker. And I can perfectly see your slides, so you can start your presentation now. Good luck. Stage is all yours.
Thank you very much. Good afternoon once again. My name is Carolyne Agudo. As introduced briefly, this is what I'm going to take you through today. I'm just going to give a brief introduction. I'll give you some strategies to win, and I'll give you some concluding remarks. So before we talk about innovations in the customer experience field, we need to talk about why are we digitalizing? Why is it important that customer experience is digitalized? And there are key aspects. Pricewaterhouse Research has found out that 86% of buyers are willing to pay more if the digital customer experience is great. So if you want your customers to buy more, if you want to make money, then it's important that you digitalize. The second reason why it's quite important to digitalize, especially now, is the fact that digitalization provides us with customer insights and data for both existing customers that we have, but also for potential customers. Why is data important in customer experience? Data is important because, one, it gives you customer trends, you're able to see customer behavior, and because you're able to see customer behavior, it means that you're also able to come up with personalized products and services that speak to your customer. According to an East African banking survey, again, I'm from Uganda. Uganda is found in East Africa. So according to a recent East Africa report by PricewaterhouseCoopers, it clearly says that customers want to be banked 24 hours, 7 days a week, wherever they are and whatever time and at whatever time. They interact with Amazon and Facebook and want a similar and key to not seamless experience. Seamless means flawless experience. So in order to have a flawless customer experience, that it's key that all institutions, especially in the financial sector, attempt to digitalize. And before I actually share the strategies, I really thought it was important to quickly highlight how COVID-19 has changed customer experience. And this is clearly from a perspective of an African in East Africa, and from what we've seen and from what studies have shown. And the key aspects that really come out, especially for us, is that there's increased customer adoption of digital as a primary channel. And I'll speak to Uganda. Uganda, where I am, it was hard to drive customer behavior and to have customers adopt to the digital platforms offered by institutions. And so when COVID came, banks locked down, branches were closing much more early. And so it was important that customers actually got into these channels to be served. And so it made it easy for banks to actually have more of their customers enroll. But you know, digital does not end at enrollment. You must have utilization. And so that clearly drove the utilization. Adoption to remote working. From where I come from, remote working was not an issue, was not something that banks, especially in Uganda or in East Africa, were doing. But with COVID-19, it was inevitable that banks needed to have workers work from home. And so according to Mr. Mwangi is the founder of Equity Bank. Equity Bank is based in Kenya, but it has branches in Uganda, in Tanzania, and recently in Congo. Mr. Mwangi says that 80% of their employees now work at home. Before COVID, 1,500 staff would report every day to their head office. However, with the onset of COVID, 70%, only 70 staff work from head office. And how that is done, it's done on rotational basis, where you work today at home, tomorrow you work at home. And that is an achievement, especially from an African perspective, because Africans, we believe so much in going to office, being seen in office. Being seen in office means you're working, which is not usually anyway the case. But COVID-19 made it inevitable that people had to work at home. We also noticed increase in cyber criminals by over 238%. And this is a worldwide figure, because I think as more customers were getting used to the digital platforms, as more customers started using the digital platforms, also the fraudsters started thinking about, on my statement, on my right, this is at accounts opening, this is at accessing credit facilities, and this is followed closely by card fraud. And card fraud is key because we are promoting customers to start using e-commerce, to do transactions online, to use the ATM. But as we do that, also fraudsters are not sleeping, and there's that increase by 238%. In East Africa, we also noted clearly that at the time of COVID-19, there was need to suspend charges on digital platforms. And I will tell you that for over 1 month with the onset of COVID-19, I remember when we went into a lockdown in Uganda, that's around March 2020, all banks put off their transactional digital charges, charges on the mobile app, charges on internet banking, charges on so many platforms that were digitally linked. This was supposed to promote a utilization of those channels. But also, as we talk about channels in East Africa, we cannot not talk about digital without talking about mobile money usage. I think currently East Africa is the highest ranked region in Africa where mobile money has got a very big usage, and over 102 million users in East Africa are using mobile money. This is so powerful that you must partner with mobile money telecoms in order to advance a service. You know, when this became a trend, banks and financial institutions were looking at mobile money as competition. But now we've moved from looking at mobile money as competition to looking at mobile money telecoms as partners. Partners in terms of offering complementary services, working with them to deliver other payment solutions that customers can adapt. So this has increased with the onset of COVID. But also, because of COVID, there's been an increase in credit cost, and we've noticed also an increase in non-performing assets, majorly because businesses locked down, some have totally closed, branches were working less hours, and therefore, because in Africa, recovery is such a manual process that you physically need to visit some of these customers, especially in East Africa. So if you can't visit a customer to recover, to remind him to pay the money owed to him, then it becomes a problem. So there was a great increase in number of non-performing assets. So I'm going into the detail of the presentation. What strategies do we have as practitioners of customer experience in order to win in this digital era? And one of the key aspects we usually tend to forget is customer onboarding, because at first contact with a financial institute, a customer can decide whether they are going to be with you for life or they are going to walk away. The experience a customer goes through when they come to your touch point for the first time determines how long you're going to engage with that customer. Currently, we notice that our customer onboarding processes, majorly before COVID, were highly disjointed. You needed to go into a bank, to go into a financial institution, you needed to physically go in there, fill in manual forms, sign so many papers. They needed to see you such that they have the in-person identification, which is highly inconveniencing. You needed to wait for a long time to open that account or to get that loan. We need to move from that. If we want to win in this digital environment, then we need to move into digital identification. And why is digital identification very important? One, it's convenient for the customer Two, it take a very short time when you log onto an internet banking platform or an app or any of these platforms that enable customers to be enrolled. It's quite a short process. If there are any errors, you can identify and address them instantly, because you will not be able to save or to generate an account. So it's important that we move towards that. It's been reported that Nedbank in South Africa has a product or developed a product called Eclipse that allows corporate customers to onboard themselves. Corporate customers are very sensitive because these are people who leave their offices. These are people who have so many things to do. They don't have time to waste. So if you expect them to walk into your branch, into your location, the chances are they will look for that financial institution that has an online presence, that has a digital app, and they're able to enroll. Banks, so in Angola, is one of those banks that have come up with digital loan onboarding for loan origination. You don't have to go to the bank to originate a loan, and this is quite important. According to Deloitte, customers are demanding more for seamless, tailored products and service choices with the user-friendly interfaces. And this is key because, again, you may have a digital option you're giving to the customer, but it's not user-friendly. What happens? The customer will attempt to enroll or attempt to use, and then they'll realize, oh, this is complicated, and they'll move on, and they will forget about you. They'll go to the next provider who has a user-friendly interface. So as we digitally onboard customers, it's important that the interfaces we're availing these customers are actually user-friendly. One of the other strategies to win is the branch of the future. And I know most of our participants here clearly in their organizations must have attempted to do the branch of the future. Right now, what is happening, I think some branches of the future just avail the customer with self-help options and probably technological training. However, a good branch of the future should be able to also offer customer advisory services. This can be done through videos, where there are videos playing where a customer, when they want to access something, there's a video playing that shows the customer how to do that, or a live agent who is connected to the customer through a video, and so that live agent can support. So on top of the self-help kiosks, on top of all these apps that we put into the branch of the future, we should also be able to avail customers with technology training. They should be able to be helped to adopt to the new technology, but they should also be able to get advice from those aspects of the branch of the future. I think key to highlight is Standard Chartered. Standard Chartered in East Africa has highly digitalized their systems. We've seen in Uganda, they've closed almost all their branches. Currently, I think they have 2 branches that are operational. And right now, I think they're thinking of closing the one, and they leave one to work. But what has happened is they introduced a fully digitalized retail branch in 9 countries across Africa. And in these branches, we noticed that clients can open accounts, clients can transact, clients can invest, but also they have other services, over 70 services available. But key to note that before they avail these services, they looked at their client feedback. What are the customers saying? What do they want? What should they put in these digital retail branches? And that's what they did. And then they incorporated that into their digital branch. And that has gone a long way into giving them a huge uptake and utilization. Sometimes you can avail a platform, a digital platform. However, the utilization on that platform may be very low. So it's key that we think of branch of the future, and branch of the future is the strategy that will enable financial institutions to win. But as we do that, we should also be put into consideration feedback, the voice of your customer. What is your specific customer of your institution saying? Is the customer telling you that they need more training? Are they telling you that they want you to also give them some form of advice in those branches of the future? It's quite key to ensure that that is taken care of as well. Then the other strategy to win, we are going digital. And so it's absurd if someone expects that you're on digital, but you're not on social media. That is quite absurd. You need to have an online presence. I usually, when you're down here, sometimes when you see jobs being advertised, and they've advertised online, on Twitter, on LinkedIn, but down there they said, deliver your application to our offices. Then what exactly are you communicating? So if you're going to embrace digital platforms, there is need also to ensure that your institution has a presence online. What does that mean? It means you're increasing the number of customer touch points, number of places where customers can engage with you. A customer does not need to use only an app to engage with you. The customer does not only need to call you probably on your contact center or call center. A customer can just go onto your Facebook page, your Twitter page, your WhatsApp, and they should be able to engage you. What does online presence also do? It increases customer confidence in your brand. The customer usually say, oh, if these people are online and they're responsive and they're delivering and they're answering all my questions, then I'm sure they're a good institution to onboard with. So that is key. But also online presence, specifically social media, can help you with targeted marketing. Targeted marketing in such a way that you are able to market your products to specific categories of customer. Is it those above 30 years? Is this those above 60 years? Are you looking at the baby accounts, those below 18 years? When you have an online presence, then you can do sponsored ads in these sites and make sure that customers who may not be your customers are actually seeing these ads and they're able to actually engage you. And that is quite key. Financial education, especially in Africa here, where we have a lot of illiteracy rates, high numbers of illiteracy rates, we must continuously educate our customers. I know this happens in other parts of the continent as well. And social media enables us to that because you can do a YouTube video, post it on YouTube, basically showing the customer how to use your mobile app. You can do a YouTube a video, post it on your Facebook page, and then pin it on the page so that every time a customer goes on your page, that's the first video that pops up. And these videos should be on your popular products and services. What are those things that customers do most with you? What are customers complaining more? Is it about internet banking? If it's about internet banking, can you do a video with solutions to customers to the issues they're escalating to you? Then you go ahead and pin that video on your page, on Facebook, on YouTube. But also, Facebook comes with a Facebook Live. A Facebook Live, you can have experts, you can have a product expert, you can have any form of expert, a marketing expert on a rotational basis, weekly or monthly. Talk to your customers about your products and services. It's a free course. You find yourself engaging and having more customers listening to you instead of marketing directly, which has cost implications. Social media also enables you to timely respond to customer issues, because when you're on social media, when you have an online presence, you're on live chat, you're on WhatsApp, customers can send you issues. Customers who ideally probably would have to visit your branch, would have to call your contact center, would have to walk in your head office, would just go onto those platforms, ask their questions and get responses timely. And that is key. People want convenience. And when you deliver convenience, it means you're satisfying their needs. That is quite key. So artificial intelligence, I'm sure today this topic has been one of those topics that has widely been talked about. But I think we cannot run away from the aspect of artificial intelligence in delivering of customer experience. That is because it has so many advantages. And one of the things that artificial intelligence can help us do as financial institutions is to detect suspicious behavior. It's to reduce fraud. Because when a customer transacts, artificial intelligence, through its insights and data, is able to tell you this customer has an average of this turnaround, withdraws from Uganda, is based in Uganda, this customer transacts at 10 p.m. and then all of a sudden, this customer, there's a transaction on this customer's account from probably South Africa at an odd time. And then that artificial AI is able to flag it to the bank and you are able to pick that early. Artificial intelligence enables us to respond to customers timely because you can have this embedded onto your IVR, your call center IVR. You can have this embedded onto your online presence, because then when someone has delayed, your agents are aware or something has happened, and artificial intelligence is able to help you respond to especially frequently asked questions. That is quite key. But also it helps by giving you personalized services and personalized data. It will give you data of Caroline. Caroline transacts at this. Caroline gets a salary of this. Caroline is on this app at this time and this time. Caroline is interested in 1, 2, 3, 4 things. And so because of that, you're then able to market to Caroline and provide Caroline with the products that she needs. Issues are resolved timely when you use AI, that's quite key. But also it helps in reducing the cost of resources that institutions usually have in call centers. If you're having 10 agents who work a three-shift schedule, maybe now you reduce those to maybe 4 agents in a 3-shift schedule, because then issues can be dealt with by the AI, and only issues that need a live agent will be escalated to the live agent. The example I want to use for this training and this conference is African Development Bank recently approved a grant of about $1,024 million to build AI system to build a complaints handling AI for 3 national banks in Africa, and that is Ghana, Rwanda, and Zambia. What is key to note that these AIs and chatbots are supposed to be in the local languages, should be at least in 3 languages, should be able to record complaints, both audio and written, but also should be able to be used by those who are unable to read and write and track their resolution. This is key because central banks usually, much as they regulate and supervise commercial banks, our experience here is they take time to adopt digital solutions. And so whereas commercial banks are running the race, are going on board, are getting into this internet banking, into all these solutions, central banks are slow to do that. And now this is going to enable them track their complaints. It's going to enable them have their issues resolved timely. And this is key because it means we're moving at the same pace with the teams that are monitoring and supervising commercial banks. This is a very big aspect that is going to enable us win as bankers, as people in the financial industry, and especially those areas of customer experience. I thought I would share with you some statistics on how we are performing in East Africa in terms of mobile banking services. If you look at the first diagram, East African digital utilization, channel distribution, we clearly notice that Kenya is a cashless economy. They totally do not use cash. When you contract that with Uganda, which happens to be down here where I come from, we are still a cash society. Most people in Uganda still prefer to carry money in their bags, prefer to enter a supermarket and buy using cash, prefer to go for coffee and pay cash. And this clearly also shows you that we have a long way in terms of financial institution in getting our customers to a level where we get into a cashless society. Quick also to note that the highest enrolled platform in East Africa is cardless service, internet banking. Everyone seems to be using internet banking. I'll tell you, for Housing Finance Bank, most of our utilization in terms of numbers of customers on digital platforms are actually the customers on internet banking. And that is not by mistake. It's because internet banking has been enriched to do almost everything that a customer would like to do. Look at the next service that is highly used or enabled in East Africa. It's the mobile banking, but not on the app. It's on the USSD code. That is also key because whereas we know that China has brought in mobile phones into the market, cheap mobile phones into the market, we also are cognizant that there are people who can't afford the smartphones. And since they can't afford the smartphones, then they will have to use the USSD code to enroll and to utilize and to transact, and that is key. And then, of course, we have mobile applications, the apps as coming in through. So that is key to note. But if you look at channel utilization, again, that was distribution. You again notice that 66% of East Africans use internet banking. 66% use mobile banking, but USSD. And then we have the app at 58%. We would love to see the app coming to probably 1 or 2, but of course we need to be cognizant again that we have high rates of poverty and people may not be able to afford the smartphones, and so therefore they use phones that are not smart and they can only access those services using a code. So why is mobile banking important? It's because, one, it's available 24/7. It's convenient. You don't need to visit a bank or a branch to be served. Financial institutions can also partner with mobile or telecom services to offer complementary services. This is quite key. Currently in Uganda, we have scenarios where banks are partnering with telecom providers to give quick loans to customers. And these loans do not only reach their bank customers, they also reach customers who they do not bank, telecom customers. And that is key because then you're able to attract those customers you don't bank to bank with you. Quite key, actually. I'm coming to the last slide. And so there's what we call hyper-personalization. Most of the time, because we are automating a lot, we are going digital, we notice that the data out there may be generalized data, and hyper-personalization enables you get tailor-made products to individual customers. It monitors individual customer behavior. It monitors what time does Rose wake up, what time does Rose go online, what does Rose buy online. And because of that, hyper-personalization enables you to tailor new offers according to the customer behavior. It enables you to predict its customer needs. It also provides options. There are quite a number of banks that have used hyper-personalization in reaching out and in engaging customers, in enabling customers to transact. I have an example here where a customer says, "Hello, I'd like to order pizza." And then this bot, because it has been enabled to have that hyper-personalization, comes and say, "I can certainly help you with that. I see last time you ordered a large pepperoni on a thin crust with a 2 liter of Coke and an order of cheesy bread as part of our family deal. Would you like to order that again?" That clearly shows that this bot has been tracking this customer's behavior, and before even a customer completes what they need, they are able to proactively provide this customer what they need. That is quite key. Finally, there is what we call humanizing digital. We are automating. We are going digital, but at the end of the day, our customers are just human and they may need the human touch. And that is also quite key. As we digitalize, we should leave an aspect that integrates a bit of human engagement in this digitalization process. And one way to do that is to offer a mix of an AI and a live support, especially for customer services. If you have an AI and a chatbot responding, at the end of the day, you should have an where those issues that these two platforms cannot handle are sent to a live to by a robot, that means you're being responded to by a human. So quite that is key. Also, one other way to humanize digital is by naming these platforms. If you have an AI, you have a chatbot, give them some names, associate them with some names such that when they come through, when someone is engaging them, they can say, "Hello, my name is so-and-so, how can I help you?" It gives the AI a human touch. And then customized openings. When a customer engages with these platforms, there should be "Good morning, good afternoon, how has your day been, have a good day." It makes it seem a human interaction rather than 100% having that platform digitalized. And in concluding, I want to leave you just with a few remarks. And key to those remarks are, what does the customer expect? And what is your priority? According to this study, Financial Service Analysis 2021 and the World Bank Retail Banking Report of 2021, it shows that 76% of customers worldwide expect a very good omni-channel experience. However, the same report says when they looked at the banks they interviewed, most of these banks prioritized omni-channel experience at 58%. What does this mean? There's a big difference between what customers expect on omni-channel and what banks are prioritizing. Focus on transparency, ethics, and social responsibility. There's a big negative variance there. Whereas customers expect most financial institutions to have a focus on transparency, ethics, and social responsibility. Banks have only prioritized that at 25%. That is quite big. That is a 40-point difference. When you look at the last aspect, improving customer support services, and we've been talking about customer support services when we talk about AI, when we talk about online presence, when we talk about chatbots, whereas customers say 31% of their priorities on this, the percentage on bank priorities is just 12%. One of our leading banking individuals in the East African industry market really is Mr. Muhere. Muhere Patrick was the CEO of Stanbic Bank Uganda. I think last year or 2 years ago, he was moved to manage Standard Bank Group East Africa and is based in Nairobi. This is what he had to say. The inspiring thing about Amazon is that rather than trying to predict what the competition is doing, they focus relentlessly on their customers. If that is your focus, you'll never fail because the customer will constantly tell you what they want, how they want to interact with you. And if you just focus on that, you'll gain market share and you'll gain revenue. Obsessing about what the customer is really is the ultimate goal. I'm from a market where the competition is so high. In Uganda, we have over 26 commercial banks. We have about 3 microfinance deposit taking banks. We have about 3 credit finance taking banks. Every bank wants to outcompete each other, and that shouldn't be the focus. The focus should be, what does my customer want? What is my customer lacking? How can I serve my customer better? So I think let's move away from competing. Let's move away from duplicating products and services to listening to our customers. So as I close, really, my food for you today is, what are your priorities in this digital era? What strategies have you put in place? But as you're putting those strategies, are you listening to the voice of your customer? Are you paying attention to what they are telling you? If so, how? Last one, what are the 3 low-hanging fruits that you can change now as you leave this presentation, as you leave this conference today? What are those 3 things that you think you have capacity to change? I want to thank you very much. Thank you for listening to me, and I submit back. Thank you.
Hi, Agudo, can you hear me?
Yes, please, I can hear you.
Okay,
Hello?
can you hear me now?
Yes, I can hear you.
Okay, great, perfect. So thank you so much for your wonderful presentation, and I'll ask the